Hi everyone. 5 days left in this year. I'm kind of wondering if it's going to end with a bang or a whimper. I haven't been that coy about my disappointment because when the ES was threatening the 1200 level back as recently as just the 19th, I really thought we'd not only make a go for at least that trend line, but maybe even break it. Well, the market made a really obscene gesture to the bears and did the following. The thing is that it's still within the confines of this kind of maddening range here. Let's get that drawn perfectly because I'm a little hung up on perfect trend lines. So yeah, we are way up here. I'm sure more than a few people are saying, "Oh, look, inverted head and shoulders pattern." Well, not only, A, not really, but B, it's kind of malformed. But I will say that if we do get above, I guess 1260 would be a good marker. That's that's pretty bullish, probably moving above there, because that's a pretty clean breakout, I would say. So not that many points away, and well worth watching. One other thing I'll show before I get into the ETFs I want to talk about is our old friend, the euro. And I'm watching this pretty much more than anything because, in my view, this is pretty much the only short position I'm at all comfortable getting a sizable stake in. It is the only one where I've got a lot of confidence in this trio of instances that preceded really sharp falls. So I say again that this is about it for me. This is the only thing that I feel good about having a large short position in. And not only that, it wouldn't take that much damage to find I'm wrong. I think the high about 132 here set just a couple of days ago is an awfully good marker for throwing one's hands up and saying, forget it. So I wanted to just walk through a few ETFs today. Got about a dozen of them here to not only talk about the bearish angle, but also the, gee, it's gone the other way, bullish angle. Start with AGQ. This is the Ultra Silver. And on the bear side, I think we could have a fall here down to about 37, 38, that range. This has been an incredible year for this one, but we've even got this nice little head and shoulders pattern going on right here. This fell over 2% today, and things are looking real shaky in the world of precious metals. So I'm not touching it because it's so volatile. This thing tends to move wildly, as is quite obvious. But food for thought. Diamonds. I did a post highlighting the similarities between these two patterns, and the line in the sand I've got is very close on this one at 122.20. That is the high from the 7th. I don't know why it's got that funny fractional portion to it now. That's better. Yeah, so 122.20. I think as long as we stay beneath the highs of the 20th, that analog holds it pretty well. We will see. It's been a pretty strong week so far. This is a much thinner one, EWJ. This is Japan. Even at a great distance here, you can see the sharp drop that took place based on the tidal wave and nuclear reactor problem. It had bounced very substantially higher after that, and in spite of no other disasters, we're well below even the worst of the tidal wave / nuclear disaster. But in addition, pretty big topping pattern here, pretty significant. So the line I've drawn here is prone to some adjustment because I see we sneaked beneath it, but just about at 8.80, thereabouts. I've anchored it to this particular date. So yeah, 8.81 is what I've got. I've mentioned the euro, and the instrument I'm using is the FXC. Not the best way to trade the Forex, but I'd rather do it this way than with a real Forex account, to tell you the truth. Our old favorite GDX, which was down over 1% today, in spite of equities being up pretty much across the board. This could be the short of the year in terms of 2012. I see us as being the equivalent of somewhere around here. I don't know where time-wise we are. Unfortunately, it's a rather important question where we are, because if we are, for example, the equivalent of here, well, there's yet another rise to challenge former highs in front of us. Very substantial, like 20+%. It's really, my line in the sand here is 53.72. As long as we stay beneath that, it is a relatively safe short side bet. I don't have a position in that. I do have a small to medium sized short in gold, GLD, which, zooming in here, the stop I've got on that gap is 157.76, and down about 0.75% today in spite of a really flat euro. IWM, and yes, these are in alphabetical order, it's pretty obvious. I've done sort of the double horizontal line thing here. We've got a double horizontal line going on back here. Couple of thresholds. The first one is 75.76, and if that were breached, the next one, which is even more important, is 76.97. If that's breached, then things get so messy that I'm not sure what to say. I think that would be awfully bullish if we crossed above that level. That would really put us in a position to get back into the low 80s. The cubes were up 85 hundredths today. Got kind of a triangle going on here, a little symmetric triangle. And it's going to take some heft to get us past all this activity, but we'll see if we can manage our way past that or not. I had shown you AGQ earlier. A little more tame one, of course, is silver, which I've got a teeny short position in just for the heck of it. Down just about as much as gold today. Not a really big day for this one, but that's not an unimportant trend line that is broken there. That's a pretty important break beneath that channel. And that channel's been in place for the past 3 to 4 years. Bonds were interesting today because they were actually up in the face of ETFs, which are up about the same amount. They usually have an inverted relationship, but they actually were pretty strong today, and we are still above this ascending trend line. And as long as we stay above that, I think that an argument can be made for bullishness on that. I shorted a small position USO today too. My view, and we've got a little shooting star going on right there, but my view on looking at the crude oil itself, the actual commodity, is that we are really near the top of that descending channel. So it seemed like a pretty safe bet to me. Also in the energy realm was XLE. Not surprisingly, kind of a similar pattern. And I don't think it's unimportant that we had breached this trend line so severely. I think that is a real tell in terms of potential weakness. And the last one is XLI. Very big topping pattern here, which has been retraced once, twice, and 3 times lately. And the line here is 34.35, I think, with respect to needing to stay beneath that. So that's it for me today, and count the days down to the end of this agonizing year, frustrating year, and we'll start anew on the 3rd. Let's remember that this Monday the 26th is a holiday, as is Monday, January 2. So until January 3 comes around, things are going to be kind of lackadaisical, I would imagine. Good night.